Hey there. Let's dive into the latest buzz from the financial world, shall we? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation and news updating daily. In today's video, we'll be discussing the status of ETF funds worldwide. Additionally, we'll provide updates on Bitcoin prices for the day. Alongside that, we'll delve into other global news related to cryptocurrency. So, grab a cup of tea or coffee, or simply tune in while you're getting ready for your day to stay up to date with the latest happenings in the crypto market over the past 24 hours. Let's chat about Bitcoin's big moves in the investment world. So, you know how everyone's been buzzing about Bitcoin? Turns out it's not just talk. Big players like ETFs, companies, and even some governments are holding on to a hefty slice of Bitcoin pie, about $175 billion worth. That's a whopping 15% of all the Bitcoin out there. Now let's dive into the nitty-gritty. The total value of all Bitcoins floating around is a mind-boggling 1.132 trillion USD as of early May 2024. But hold on, it's not all sunshine and rainbows. Bitcoin's price took a bit of a tumble recently, dropping from over 64,000 USD to around 57,000 USD. And here's a juicy bit of news. VanEck's HODL Bitcoin ETF kicked off trading this January and is already managing a cool 600 million USD. They're holding on to 9,276 BTC, which is just a tiny 0.05% of Bitcoin's total supply. But hey, it's a start. Businesses are getting in on the action too, accepting Bitcoin like it's no big deal. Plus, with some fancy upgrades to the infrastructure, using Bitcoin's easier than ever. Oh, and let's not forget Hong Kong's warm welcome to its first 3 Bitcoin ETFs at the end of April. The opening day trading volume wasn't exactly earth-shattering at 11.2 million USD, especially when you compare it to the US's first-day frenzy of 4.5 billion USD in Bitcoin ETF trades. But guess what? The US is still where it's at for Bitcoin ETF action. Most of the trading's happening there, and they're holding the reins pretty tight. Now, for the name dropping, MicroStrategy's sitting on a mountain of Bitcoin, 278 BTC, to be exact, worth a staggering 12.4 billion USD. Marathon Digital Holdings isn't too far behind with their stash of 17,381 BTC, ringing in at about 1 billion USD. And Tesla, they're cruising along with 9,720 BTC, which is a cool 562 million USD. So, what's the takeaway from all this? Bitcoin's not just a trend, it's becoming a legit part of the investment landscape, with some serious cash backing it up. And despite the ups and downs in price, the big guns are betting on Bitcoin for the long haul. So, picture this. MicroStrategy just rolled out this cool new thing called MicroStrategy Orange. It's like a digital ID card, but way cooler because it's on the Bitcoin network. Michael Saylor, the big boss over there, announced it at the Bitcoin for Corporations conference on May the 1st, 2024. Here's the scoop. MicroStrategy Orange is all about keeping your identity on the down low. It lets you create these things called decentralized IDs, DIDs, which are like super secret identities for the digital world. And the best part? It's all open source, meaning anyone can use it. And it doesn't rely on any side chains. It's so efficient it can handle 10,000 DIDs in one go with a single Bitcoin transaction. Talk about packing a punch. The goal here is to give folks DIDs that are totally trust-free, can't be messed with, and will stick around for the long haul, all thanks to the public Bitcoin blockchain. They've even put all the code and how-tos on GitHub for everyone to see. Now let's get into the nitty-gritty. MicroStrategy Orange has 3 main parts: Orange Services, SDK Orange, and Orange Apps. Think of Orange Apps as the VIP pass for businesses to give their employees their own DIDs and launch cool apps. SDK Orange and Orange Apps are like the Swiss Army knife for techies to customize and integrate services on all sorts of devices. When you sign up, you'll get an email signed by MicroStrategy's DID. And voila! You've got your own unique DID, and a set of keys, one public and one private, just for you. Here's how it works. You write an email, hash it, which is like putting it through a shredder and then piecing it back together so no one can read it. Sign it with your private key. That's like sealing it with a secret handshake. And send it off with your DID and signature. When someone gets your email, they can check out your DID and signature, find your public key on the blockchain, and make sure everything's legit. It's like a secret decoder ring for emails. MicroStrategy wants to take this tech beyond emails to messaging apps, social media, and even e-commerce, business, and finance platforms. They've already got this orange for Outlook thing that makes sure your emails are the real deal. And just for some extra spice, Michael Saylor's been steering MicroStrategy into Bitcoin since 2020, treating it like a treasure chest to beat inflation. They just added 122 more Bitcoins to their stash in April 2024, worth a cool 7.8 million USD. Even though they reported a loss of 53.1 million USD for the first quarter of 2024, they're not sweating it because their Bitcoin pile's market value shot up by 65%, hitting a whopping 15.2 billion USD. So, there you have it. MicroStrategy's not just playing the Bitcoin game, they're changing the rules with their new digital ID wizardry. And they're betting big that their Bitcoin bet will keep paying off. Hey, have you caught up with Coinbase's latest earnings? They're totally crushing it this quarter. Their revenue hit $1.6 billion, which is a whopping 72% jump from the last one. And guess what? They've already outdone their entire profit from 2023. The cool part? A big chunk of their net profit, like $737 million, is just from their crypto assets growing in value. They're sitting on a treasure chest with $7.1 billion in capital, and they've got $1.1 billion in cash from some smart bond moves. Sure, their debt's up a bit to $339.9 million, but when you're raking in over $935 million just from fees, that's small potatoes. They're trading volumes through the roof, too, hitting $56 billion. That's even more than the U.S. Forex market. Institutional trading's on fire as well, with revenues at $85 million. That's 133% more than before. And their Coinbase Prime platform for the big players? It's handled $256 billion in trades. Oh, and you'll love this. During the memecoin frenzy on Solana and Base blockchains, Coinbase's Base blockchain got so busy, it went from 200,000 to 600,000 transactions in just over a month. Talk about being in demand. Their stock's been a bit of a roller coaster, though. It shot up nearly 9%, but then dipped by 3% after hours, sitting at $222. Still, it's up 50% from last year, which is pretty sweet. And they're not slowing down. In April alone, they made over $300 million in trades. They're predicting service and subscription revenue to be between $525–600 million next quarter. So yeah, Coinbase is definitely on a roll. Wow. Did you hear about the Bitcoin ETFs in the US? They had a wild day on May 1st with a record $628.9 million pulled out in just 24 hours. The Fidelity Bitcoin Fund was hit the hardest, losing $191.1 million. Even BlackRock's fund felt the sting, with its first net outflow of $36 million. This all happened when Bitcoin's price took a tumble, dropping 10.7%. It's got some investors wondering if it's still the safe bet they hoped for. But the ETF pros like James Seifert from Bloomberg are saying it's all part of the ebb and flow of ETF life. Funds come in, funds go out, no biggie. Nate Gerazzi of the ETF store echoes that, pointing out that after a big growth spurt, it's normal for these funds to take a breather and adjust. It's just the way ETFs roll, and it helps them gear up for more growth down the line. So, no panic. It's just the usual market dance. Yesterday we witnessed a significant drop in Bitcoin's price, down to $56,000, the lowest level since March 24th. This came as quite a surprise as we were all expecting Bitcoin to rally post-halving almost 2 weeks ago, yet it has been maintaining a stable price. However, this morning, there are more positive signals as Bitcoin has returned to the $59,000 range. Let's look forward to Bitcoin's price growth in the future, especially with the increasing approval of Bitcoin ETFs worldwide. Before we dive into today's market-breaking news about CZ, Binance, and more, please hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Check this out. Hong Kong's new Bitcoin spot ETFs just opened up and they've scooped up a cool $217 million this week. But here's the thing. It's just a tiny splash compared to the tidal wave of cash, over $628.9 million that bolted from the U.S. Bitcoin ETFs in a single day. The Hong Kong ETF's debut? Kinda quiet with just $21.15 million traded. Nothing like the U.S.'s hefty $4.6 billion. And while Hong Kong isn't sweating it, the U.S. is seeing some serious outflow action, with Fidelity's fund dropping nearly $190 million. So what's the deal with Bitcoin's price? Could it slide back to $50,000? After a lukewarm start in Hong Kong and some price dips, it's looking shaky. Even the Fed's steady rates haven't nudged it back up to $60,000. Word on the street is, if Bitcoin can't cling to $59,000, we might just see it dip to $50,000. Buckle up, it could be a bumpy ride. So, Uniswap's been buzzing like crazy. Their wallet numbers have skyrocketed a whopping 140% since last May, hitting a sweet 7.26 million. That's not just growth. That's an explosion. And get this, they've not just been gathering wallets. They've been smashing records left and right. Just last month, they hit a mind-blowing $2 trillion in trading volume. They're not just playing the game, they're owning it, keeping their crown as the top DEX with a massive $536 billion locked in. But PancakeSwap? Well, they're trailing behind with a TVL of $2.3 billion, and that's after taking a 40% hit last week. Ouch! Now, it's not all rainbows and unicorns for Uniswap. The SEC came knocking with a Wells notice, which is basically a "we might sue you" letter. But Uniswap? They're standing their ground, claiming they're straight as an arrow and totally legit in the U.S. In response to the SEC's side-eye, Uniswap decided to tweak their fees a bit, hiking the interface fee from 0.155% to 0.25% on most trades. They're making moves, adjusting to keep things smooth. And for those keeping tabs on the UNI token, it's been trading at $7.11, with a modest 1% bump in the last day. Not too shabby, right? So yeah, that's the scoop on Uniswap. They're growing like crazy, breaking records and dealing with some legal drama, but still pushing forward. It's definitely a space to watch. Jack Dorsey's Block Inc. is making waves in the Bitcoin ocean. They've decided to reinvest a hefty 10% of their Bitcoin profits back into buying more Bitcoin every single month. It's like they're saying, we believe in Bitcoin today, tomorrow, and way into the future. Dorsey, the guy who also dreamt up Twitter, penned a letter to Block's shareholders that's pretty much a love letter to Bitcoin. He's convinced it's going to be the universal internet currency, and he's putting his money where his mouth is. Block's been doing pretty great, holding on to a Bitcoin treasure trove worth about $573 million. That's from a profit of $233 million. By the way, their revenue's up 26% from last year, hitting $2.73 billion. Thanks to Bitcoin's price bump and solid earnings from other ventures like Cash App's card, their Buy Now Pay Later platform, and Cash App's loan service. They've even sold $2.73 billion worth of Bitcoin to customers, pocketing a cool $80 million in gross profit for the first quarter. And when they shared their first quarter wins, their stock price did a happy dance, jumping up to $75.75 after opening at $70.30 in the morning, which is a sweet 5.17% increase. But wait, There's more. On April 23rd, Block announced they've cooked up a teeny-tiny 3-nanometer Bitcoin mining chip. This little gizmo is part of their grand plan to help folks mine Bitcoin on their own, offering up both the chips and the whole mining system. The only hiccup? Block's got some legal stuff to sort out with the authorities over some crypto services that might not be totally up to code. But hey, no one said being a trailblazer was easy, right? So, that's the lowdown on Block Inc. They're doubling down on Bitcoin, raking in the dough and shaking things up with new tech. Keep an eye on them. They're on a crypto mission. So, MoonPay and PayPal are shaking hands, making it super easy for folks in the US to snag some crypto. Imagine buying digital coins as easily as shopping online. That's what's cooking. MoonPay's got this app where you can now use PayPal to pay up, whether that's from your PayPal balance, straight from your bank, or with your debit card. It's a game changer because, let's be real, the big banks aren't exactly rolling out the red carpet for crypto yet. PayPal's not just a small fish in this pond. They've got a whopping 426 million active accounts worldwide. And MoonPay? They're all about crypto and have already got over 15 million users hooked. The big news is that MoonPay's CEO, Ivan Soto Wright, says this deal is like peanut butter and jelly. A perfect match. MoonPay gets to spread its wings and PayPal gets to jazz up its crypto menu beyond the few big names it offers. Here's the kicker. PayPal's not just dipping its toes. It's diving right into MoonPay's pool. This isn't some one-off thing like what they've tried with MetaMask. Nope. PayPal's setting up shop inside MoonPay's world. Soto Wright's stoked because it's the first time they've pulled off something like this with PayPal. They're talking billions in crypto passing through their gates, and they're betting this move will draw in even more customers, especially those who've had their cards turned down by their banks. It's not anyone's fault. It's just how banks roll with crypto sometimes. So yeah, that's the lowdown. MoonPay and PayPal are teaming up to make buying crypto a breeze, and it looks like they're onto something big. So, get this. BNP Paribas, this huge European bank with a mind-boggling $600 billion under its belt, just dipped its toes into the Bitcoin pool. They snagged 1,030 units of the BlackRock Bitcoin ETF, which is like a big thumbs up to Bitcoin from the finance world. It's not a mega investment, it's 41,684, but it's kind of a big deal. Why? Because while some folks are pulling their cash out of US spot Bitcoin ETFs, BNP Paribas is stepping in saying, let's do this. They're the second biggest bank in Europe, and they're not just following the crowd. They're investing in the iShares Bitcoin Trust that BlackRock's got going on. Here's the scoop from their latest 13F filing. On May 1st, they put down that $4,684. It's not about the amount. It's about the move. It's like they're opening their arms to Bitcoin, even when it's not everyone's cup of tea. And considering they manage more money than most of us can even imagine, that's a pretty bold step. So, yeah, BNP Paribas is making moves, showing that even the big banks are getting ready to ride the crypto wave. And who knows? This could be just the beginning. All right, let's chat about Pantera Capital's latest crypto moves. These guys are big time, with over $5 billion in assets, and they've just thrown some of that weight behind Ton blockchain. Why? Because it's tied up with Telegram, and they think it's got the chops to bring crypto to the masses. So, here's the deal. Telegram's got this huge user base, like 900 million people, huge, and they're all getting a taste of crypto now, thanks to Ton. Pantera's betting that this is just the start, and they're pumped to see where it goes. And get this. Telegram isn't just flirting with crypto. They're all in, letting folks pay for ads with Toncoin and even send Tether, USDT payments through Ton. Pantera's digging this, because Ton's fees are dirt cheap, and they've got the whole package with bank transfers and exchanges built right in. Ton's not just playing in the minor leagues either. It's hit the top 10 cryptocurrencies with a market cap that's through the roof. Meanwhile, Pantera's not just sitting back. They're scooping up Solana on the cheap and gearing up a massive $1.25 billion fund for all things crypto. Founded way back in 2003, Pantera's one of the old guard in crypto venture capital, with a hand in over 180 startups. They're not just watching the crypto world, they're helping shape it. And this move with TON? It's a big piece of that puzzle.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.